All right, what's going on? So I wanted to bring up GBPAUD this week and talk about a little bit of a thesis of what could be going on here. So earlier with this range of consolidation here, up here at the top, I was considering if above this range there was going to be volume, like some hidden trap volume. So say we have something like this range of chop consolidation, right? And when that's going on, it's important to recognize that there are orders stacking up both on the top side and on the bottom side of a range like this. So that means that while this is consolidating, there are traders making up their mind about which bias, which direction they think the market's going, and they're placing limit orders. Or when the market simply breaks this range, they're either buying or selling. Now, typically, when you have a range happening and then price breaks out of the range, most traders are going to just follow the direction that it's going, and then we result with a sort of wick like this, where a lot of traders are buying and institutions are selling off their shares to them. So here we have, I placed this as a Fibonacci level just because I thought this could be a decent Fibonacci retracement. It's not ideal, but at this top range, when volume initially broke this and then we made another push out of it again, what that tells me is that there were a lot of long orders taken. And if there were a lot of long orders taken, I mean, imagine this, retail traders placing trades like this, and where would their stop losses be? Right here, right? Somewhere that's quote unquote safe. So that's not how we would trade because we're actually paying attention to where liquidity is. But a lot of retail traders might be placing stop losses down here, which means even if this were to be bullish in the near future, if we were to see higher highs, it would be likely to see maybe a lower swing down here to actually capitalize on that volume. So with this, I mean, 91.44, maybe even possibly back down to this micro range here could be a possibility. Now, what I see happening, what I liked about this, I was looking at this last night and just sort of the price action going on. I'll delete this box just to make it a little more clear. Um, we have we had this happening, right? Okay, and actually, let me do this reversal thing, just so I can show you exactly what how this was looking. Okay, so back to here. You see price action like that. What does it tell you? If you were to look from a retail trader's point of view, right? This is an M. We have the higher point, we have the higher high, and then we have the lower high, and now it's making this M shape that traders like to see. There's always going to be an M or a W, right? But how do we know what's actually happening? So typically when it's a sharp M like this, if we have this pattern, remember we're not looking at the pattern, we're looking at what's happening with the liquidity. There's a lot of people thinking, oh, this is just going to dump right off, right? And if that's the case, play this forward. Okay, so look, they're going to be rewarded for that sentiment initially. Say, okay, price just dumped off, and now there's going to be a lot more confidence in retail traders to actually continue to short this. And what that tells me, especially if we're looking at, we want to see wide price action. I'll tell you this, we want to see something that's happening that it's a much wider scope. So when the more consolidation we see in a range and the less it's breaking that and the more it's sort of breaking down into that range, the stronger the trade is typically going to be because more volume is being taken. 1 plus 1 is 2, right? Okay, so look at that. So that last candle, did you see how it looked very bearish? It was a strong bearish push, and then all of a sudden it came back and closed within the body of the previous candle. And then we see this wick higher. So what a position like this tells me is that we're going to need to see some wicking like this back into this range to begin capturing some of the volume of the people that were selling right here, especially a lot of like scalping positions, a lot of smaller positions, a lot of people that are aggressively taking the short. All right, so again, price continued, and we didn't make it much further than that so far. But just sheerly the fact that we saw this wick come back up here, this is what, I don't know, a retail trader call whipsaw, right? It was super bearish for a minute, and then it whipped right back up here. What that tells me is that could have been a swing to actually take some of the volume out of here and make this actually possible for this bearish continuation if that's what we're going to see. So ideally, we'd see a push down. Say, I'm going to start using this tool. This is a pretty cool tool. It makes like fake candlesticks for you. It's kind of fun. Maybe not accurate looking candlesticks. I'll say those are not what. Yeah, all right, never mind. It was a cool idea. But let's say we see something like coming down from here. Whoops. And maybe a push back up into here. Not gonna let me trail it. There we go. Push back up into here. And then maybe see a lower low, right? Because I'm also looking at these low points. See, we have these and they're progressively going lower. So what I would expect, especially if volume was satisfied right here, that we would see another push lower than this region. Where I think if you wanted to be, easy about it, 91.50, something like that, if we're going to take the middle of the range, there's always a possibility we take this whole range though and come back down to 90.30. So given that, I mean, we have 250 pips on the table if that's actually going to go down. If you're just going to take 91.50, that's still, well, I'm sure, solid 100 something. Yeah, 150 pips. So again, we don't need to take the whole range. We don't need to be entirely correct about it in order to get like a large amount of pips. I would say, like I said, there's a possibility this happens, but let's say the macro bias on this is still bearish. Like let's say, especially since we saw these candles close higher right here, we're actually going to see a move push way up past this. It would be logical that liquidity would be taken down here and then price moves bullish from there. But I'm unsure personally if this is actually going to be bullish or if we're going to see this ending up being bearish. Now, the last test to see if this would actually remain bullish is if it tested back down here. It's 89.10, or give it 89, give or take. And if we broke below that and moved down into these lower regions, it'd be very unlikely that we see this be bullish. But we don't need to predict where price is going to go in order to be profitable. I've said that before, and I'll say it again and again. We're just looking for the next move. We're looking for the next point of logic to where liquidity may play out. All right, and there's always many possibilities with the markets. So again, this is not gospel. This is what's going to happen. Always do your own analysis. Always do what you feel is the right move to make within the market because it's your capital that you're trading. So never take anyone's signals for granted, but the point here is to make sense of what's actually happening with liquidity. There's always possibilities within each thing that's going to happen. We're just looking for the most likely possibility based on logic and based on where we can see liquidity. So like I said, I think the most logical thing is for us to see some sort of lower low formation below these 2 points. But what could also happen right here, especially given that these candles closed higher right here, is say we say something like this, and this ends up making a nice floor right here. Like we end up respecting this range more or less, or especially like, where's my box? Oh, there it is. This point right here. Like say we end up not breaking that and we actually respecting this low, that would also be an indication of, okay, price is going to do this and then we're going to see it go higher. So we're always just going to be here reacting to what's going on, and getting a proper risk to reward from it. Because as I had this drawn on here, like say you entered this right here in a short, and let's say you just wanted to keep it a tight stop. So let's say we're assuming that liquidity was taken really cleanly right there and price is not going to go above there. If price goes above there, we're going to see a higher high. So we take something like that, bring it down to 91.50. Let's take profit 1. So we get about a 1 to 2 risk reward on that. If we actually think it's going to go all the way back down to this range here, we're ending up looking at like a 1 to 3.4, 1 to 3. So decent risk to reward. Obviously, as it gets better, we can roll stops. So in other words, like actually make the stop losses tighter, but we're going to use the smaller time frame to actually do that. And in this video, I don't want to go into the smaller time frame just because I think this is a trade right now that, and you know what? Actually, why not? Let's go into the smaller time frame. Because I don't have drawings on here, so you're just going to have to bear with me. So here we are at this point of call right here. And again, this place that I put the green box on the higher time frame was here. Is me not wanting to see this point of volume being broken. If it does, we're bearish. Just as simply as that. If price breaks down below that, we're bearish. And if that were to be the case, it would be safe, quote unquote. Market's never safe. It's never something where it's guaranteed. That's something important to note. But if you lowered your stop loss to somewhere like here, whereas what I was showing on the higher time frame, the stop losses were above these levels, and specifically, I want to say this level too. This is just giving our trade some breathing room. So it's important to know how many pips you're risking, and with how many pips you're risking, know how big you can size your position in order to control your risk, in order to get a decent percentage risk. But when you can start getting trades on the lower time frames that align with the higher time frames, you can make your stops smaller. Therefore, you can risk more if you have that sort of personality, if you think like that. But again, with the smaller time frame, if we break this point and go lower than that, then what I was talking about on this higher time frame is much more likely to play out, right? We got to break this spot though. We got to break through this, okay? So again, this is not financial advice. This is just a way of viewing chart and viewing price action in a logical fashion to where we can find high probability setups and be profitable whether or not we're correct all the time, because nobody is correct all the time. Remember, this is a game of consistency. This is a game of managing your risk to reward properly. If you can get even a better than 50 to 50 win rate, and then but you're getting trades every time that are 2 to 3 times what you're risking on that trade, profitability is inevitable. So remember, don't be greedy. Just take everything as it comes to you, and don't ever act like you know exactly what's going to happen. So with that, I hope you learned something from this video. Let me know what you think, if this trade makes sense or not, what you might be seeing on this chart. And with that, have a great night. I wish you happy trading. Peace out.